So we're going to be looking at the income statement and how to better understand the income statement. Uh, the key thing that you got to keep in mind is the income statement is important because it shows you the profitability of a business at any given time. Now, if you viewed our previous video on the balance sheet, what the balance sheet tells you is what the company owes, what the company owns, and what it's worth. Similarly, when you look at the income statement, it shows you the profitability of a business that's been run. Now, this equation is the foundation of the balance sheet. So you've got your sales minus your cost, which is equal to income. To put in a better picture, just imagine this pizza being the sales that you have from your company. So the sales you've got from shipping out your products. Let's say that 1/4 of that pizza is your costs. So it's the cost associated with you building and selling the product. So you have your costs. The remaining slice, or the last 1/4, is what is re- retaining as your income. So that's kind of your profit margin if you think about it. And this equation is the foundation or the bedrock upon which the income statement is built. So let's have a look at the data fields that you'll find in an income statement. So the first thing you'll have is something called net sales. Now it can go as revenue. Revenue and sales are interchangeable words that are usually used around. And it's extremely important that you not get it confused with orders. So the easiest way to think about it is your net sales is a product or a merchandise that you've shipped off from your factory or your warehouse or your shop. Orders are just sort of customer interest that you received, if you think about it, because it does nothing but add to a backlog. Once something is shipped off from your premises, you've sent out an invoice and you are liable to get the money back. So that counts as net sales. You can find this in the balance sheet under accounts receivable, because once you've sent out, like I said, once you've sent out your product, you're sent out an invoice and you're pending payment. Now, the second thing on our income statement is something called COGS, or cost of goods sold. Now, anytime you have a product, it costs you money to build that product. It could be stuff like raw materials or your manpower. So going back to the example of the pizza shop, if you wanted to sell pizzas, essentially you'll have costs associated with you making a pizza. So you've got you have to buy your dough, your tomato sauce, your toppings. You'll have to pay for the men to build us to make the pizza, and that's going to be your costs. And once you subtract your net sales from your cost of goods sold, you are left with the gross margin, also known as the gross profit. So this is what's remaining once you've subtracted your cost of building a product and the amount of sales you've made. The fourth thing that you will find on an income statement is usually research and development. Now, you'll have a few fields like research and development, marketing, admin expenses, general expenses. But to keep this video sort of short and crisp, we are just going to club it all under SGPA, SGPA, which is selling, general, and administration. Now, these are expenses that are not directly linked to you building your product, but it is costs that are associated with you having to sell your product. So things like marketing, research, you don't really need it to build your product, but it's expenses nonetheless. Now, the key thing to keep in mind is anything that's associated with you building a product would be a cost, and anything that's not would be an expense. And once you've added these two, you get the operating expenses. So keep in mind, expenses and costs are not the same thing. Costs are anything that goes directly into you making a product. Your seventh line item you're going to get is income from operations. So once you've got your gross margin and you deduct any operating expenses you make, anything you get remaining would be income from operations, stuff that's not been consumed by any operating or non-operating expenses. Your eighth field, just find the pen. Your eighth field is going to be something known as income from interest, or interest income. Now, the easiest way I like to think of this is, say you've got your income and you've placed it in a bank, and if a bank is paying you an interest on this, it still counts as a form of additional income, and that gets counted as interest income. Then obviously you've got your income taxes. Again, a portion of what you make will be had to be paid back to the government in the form of taxes. And income taxes is extremely important because it has to be deducted for you to realize what your profit is. Which brings us to the end. The equation that ties it all up is your net income. Now, keep in mind when we started this video, when we started the line items, it was net sales. It's how much you sold. Net income will tell you how much you've made, right? And in order to find your net income, what you do essentially is you take your income from operations, and you add your interest income, because both of these have money coming into you. And then you deduct any income tax because that component is money going out of your pocket or your bank account, so to speak. So your income tax, and that should give you your net income. So just as a reminder, net sales is how much you've sold, net income is how much you've made.